Hello and welcome to the program. I'm Ini John Mekwa. Well, let's start as usual with markets on the African continent. NGX begins the week on a positive note, though marginal as intraday, while the JSE of South Africa gained almost 2%. And of course, that was at intraday. EGX 30 of Egypt was on the flip side, shedding more than 0.5%, while Kenya gained more than 1.5% on Friday, closing the market on Friday on a positive note. Over to the Middle East now, where trading activities were mostly positive. Also, Abu Dhabi index was up 2.15%, with the same sentiment spreading to Dubai. It gained 1.28%. Also in the green, Saudi Arabia up almost 1%, while Qatar gained most 3.60%. Let's go to Europe now, and we have Chris joining us to tell us European Union sanctions against Russia's central bank came into force early today. Chris, tell us, what do they look like and what effects are they likely to have?
The measures include a ban on transactions with the Russian central bank, and in an unprecedented move, the EU is freezing all of Russia's hard currency reserves in Europe in a bid to block financing for Russian President Vladimir Putin's war against Ukraine. Not all of the Russian central bank's reserves can be frozen, EU Foreign Affairs Chief Josep Borrell said, because they're not all in Western states. The EU cannot block reserves in Moscow or China, for example. And Mr. Borrell added that Russia has increasingly stashed its reserves in countries where they cannot be blocked. Nevertheless, experts say it'll be harder for Russia's central bank to stabilize the ruble, as it cannot rely on its EU currency reserves anymore. An exclusion of some Russian financial institutions from the SWIFT banking network is also in the works. And there's a number of other measures just announced in the past hours. Deutsche Börse, the German stock exchange operator, said it was suspending from trading a number of securities from Russian issuers with immediate effect. Energy major BP deciding to abandon its stake in state oil company Rosneft at a cost of up to $25 billion. Also, in another first, the EU and Canada say they are closing their airspaces to Russian carriers. As a result, Russia's Aeroflot said it would cancel all flights to European destinations, and Russia is now widely expected to retaliate further against the air blockades. It has already barred airlines from Britain, Bulgaria, and Poland from entering Russian skies.
And Russian ruble plunged to an all-time low today. That's despite the Russian central bank announcing a slew of steps to support domestic markets. What more do you know about this?
Now, the central bank is trying to contain the fallout on several fronts. Today, it raised the interest rate in Russia to an unprecedented 20% in a desperate bid to shore up the ruble amid a swath of Western sanctions. And it has said it was barring traders from selling Russian securities held by foreigners. Also, the Russian finance ministry, along with the central bank, plans to order domestic exporting companies to sell their foreign exchange revenues starting today. Both said in a statement the companies should sell 80% of all foreign exchange revenues they are receiving under their current export contracts, the statement said. All of this as the ruble came under heavy pressure on Monday, diving to fresh record lows against the US dollar. Indeed, there have been reports of first cash shortages at Russian ATMs. And several European subsidiaries of Russia's Sberbank, a majority owned by the Russian government, are failing or are likely to fail due to the reputational cost of the war in Ukraine. That is according to the European Central Bank. Now, the Western sanctions against Russia have been weighing on stocks again. Germany's DAX index losing 2% in the first part of Monday's trading session. Other European markets under pressure as well.
And in a surprising move, the president of Switzerland has said it was highly likely his government is shifting from its former stance of not imposing sanctions on Russia due to Swiss neutrality. What's behind that shift now?
Well, this shift is certainly a result of the growing pressure by European and other countries. We have to keep in mind that although located within Europe, Switzerland is not part of the European Union or the Eurozone, the 19-country bloc sharing one currency. And it is also a result of the pressure growing within the country. In the biggest peace march in decades, around 20,000 people demonstrated in the Swiss capital Bern on Saturday to support Ukraine, some booing the government over its cautious policies. Switzerland has walked a tortuous line between showing solidarity with the West and maintaining its traditional neutrality, something that the Swiss president Ignacio Cassis says must be preserved. That does not prevent us from calling a spade, he said, though. The government had so far said that it will not let Switzerland be used as a platform to circumvent EU sanctions. Switzerland is a major hub for financial transactions, and Russians held over $11 billion in Switzerland in 2020. The National Bank says the Swiss government last week amended its watch list to include 363 individuals and 4 companies that the EU had put on its sanctions list to punish Moscow. Now, more severe action could be around the corner. Mr. Cassis also said that Ukrainians fleeing the country would be welcome for a transitional period, as he put it.
Transitional period. Well, thank you so much, Chris. It's obviously a developing story which is in our faces, and of course we'll follow it up as we go. And still the same issue in the UK now, in the midst of the invasion into Ukraine by Russia. UK is getting a lot of criticism, first on the level of sanctions and now on the introduction of new visa rules. Well, we have Juliana now joining us to tell us all about this. Hello, Juliana. Good afternoon. Now, what's this new visa rule for Ukrainians that some are calling shameful and unacceptable?
Good afternoon, Inni. Well, so far, there are no new visa restrictions yet. Priti Patel, the Home Secretary, she is going to be addressing MPs in the Palace of Westminster, I believe, at 2:30 local time. So in a couple of hours, we'll find out if there are going to be any new visa, I would say, a loosening of the current visa restrictions for people coming from Ukraine. So as it stands at the moment, if you are a British resident of Ukrainian citizenship, you can invite your parents. I believe you can also invite your children, if they are under the age of 18, into the UK for a fast-track service. Now, all Britain has done is sped up that process. So there are no new restrictions in place at the moment. And that is a loosening of restrictions in place at the moment. And that is where the criticism has come from. We know that historically Britain have always been very fearful of an open door policy, particularly this Boris Johnson government, who are Brexit first, shut borders and keep foreigners out, particularly the people in Europe. And that has come under so much scrutiny, especially because we know there are about 400,000 Ukrainians who have fled the war zone in recent days. Of course, we know that Africans and Nigerians are amongst those struggling to get out of the borders. And so we are waiting to hear what Priti Patel is going to say. There are about 70,000 Ukrainians here in the UK. Not much. I think most Ukrainians, quite surprisingly, are based in Southern America. But still, there are a huge community here. Their noise is going pretty loudly outside number 10. They want, I believe, a kind of similar treatment that we saw implemented yesterday by the EU. I believe the EU are now saying that if you are a Ukrainian citizen fleeing this invasion, you can go and stay in the EU for about 3 years. I think that's what Priti Patel is going to outline later today, or even potentially go a little bit further during the riots and the violence that we witnessed in Hong Kong last year. Dominic Raab, the then Foreign Secretary, said that any citizens coming into the UK would have a 5-year visa. So that's what we're expecting. But yes, there is lots of criticism because at the moment there are no new loosening of visa requirements. It's only a speeding up of a process that's already in place.
Yeah, and what other reactions do we have? I know just before I came on, the Ukrainian representative was waiting at Belarus for the talk. So all eyes are there. Do we have reactions from the UK on this possible diplomatic solution?
Well, I suppose all reactions at the moment are global, aren't they? It's so difficult, Inni, because what we are finding, which I think is a crucial element of this story, is there's just so much misinformation out there, so much disinformation, not just from the Russian side, from all sides of the story. But in terms of the most breaking news, yes, negotiations are actually taking place at the moment, I believe, in Gomel, which is a city on the Belarusian and Ukrainian border. But quite notably, this is taking place on the Belarusian side. This goes against advice from Washington. Washington did ask the Ukrainians not to negotiate with Russia when they've got a gun pointing at their temple. But alas, they have gone further with these talks. I believe talks have been going on for about probably an hour now. This appears to be the only path to diplomacy. So it's really important that these talks go well. This comes, of course, as the fighting continues. According to the United Nations, about 5,500 Russian troops have been killed. We know when it comes to war, attack is a little bit more difficult than defending. And according to Britain, the Russian strategy is not paying off. That's what we're hearing at the moment. And again, we are hearing that there are hundreds of civilian deaths. I think the Ukrainians are reporting that it's much higher than what the official death toll has been from the United Nations, which I believe stands at about 150. So yes, it is obviously an ongoing, developing situation. The Moscow Stock Exchange remains closed, as we've been discussing already. We know that the ruble has already fallen about 20%. Vladimir Zelensky, the Ukrainian Prime Minister, who's probably the most famous person in the world at the moment, he obviously this morning asked for the EU to immediately enlist Ukraine as a member of the EU. We'll see how that goes. I don't think that's going to help with G7 talks. And just as I came into the studio, I did read actually that the Ukrainian government are allowing prisoners to leave their cells to join the fight. So yes, it's a developing story, but of course we've got to be careful because the fog of war and the disinformation is at an increasing high at the moment. Exactly. There are even branded media stations reporting lots and lots of fake news, which is really troubling.
Yeah, so we have to be really careful. So how's the market reacting to all of this?
Of course, the markets are turbulent because we know that the SWIFT system has now managed to plumb out Russian financial institutions from transacting with the 11,000-strong establishment. This has had a knock-on effect. Oil prices are trading higher, commodities are trading higher, and banks are all much lower because we know now that if you are a member of the G7, your banks can no longer trade with Russian banks. And that does have a financial fallout that has ripple effects. In fact, I believe G7 members are going to be having an urgent meeting in a couple of hours with Jens Stoltenberg, the NATO head, and Washington. That's a side note. To have a look at the markets in London, the all-share is down, of course, by 1.33%. The FTSE 100 is down by 1.11%. In the FTSE 250, the domestic market slightly shielded, down by just 0.5%. In the currencies market, the British pound is up on the US dollar by 0.18%, though it's down against the euro by 0.04% and up against the Japanese yen, the safe haven, by 0.16% in E.
Yeah, the safe haven at this time. Thank you so much, Juliana. Well, God keep us at this time, and we'll try and stay safe also.
Yeah, thank you.
Meanwhile, the International Monetary Fund has warned that the conflict between Russia and Ukraine poses a global economic risk that could derail post-COVID-19 recoveries by countries and regions. This comes as the impact starts to be felt across economies, with global fuel prices hitting above $100 a barrel. That was last week, and which will increase the cost of transport, manufacturing, and ultimately the cost of living. Moody's analytics notes signify that escalation of the Ukraine-Russia conflict rattled equity markets and has led to an increase in global oil prices, which likely had some risk premium already embedded. Well, just a little bit, not too far away from what's going on in Ukraine, the Independent Petroleum Marketers Association of Nigeria and the Nigeria Union of Petroleum and Natural Gas Workers are loggerheads over the pump price of petrol, as fuel scarcity worsened in many parts of Nigeria in the last fortnight. Many fuel stations increased the pump price of petrol higher than the official 165 per litre. In Bayelsa, for instance, the price of litre has gone as high as 300 naira. And this has, in one way or the other, been connected to the ongoing in Ukraine. So many have connected this as the activities going on at the Black Sea and transportation of petrol into Nigeria. Well, we have the former president of Petroleum and Natural Gas Staff Association, Mr. Peter Esele, now, who may have some insight on this to help us paint the picture better on what may be going on as we see a persisting scarcity of petrol in major cities in Nigeria. Good to see you, Mr. Esele. Good afternoon. So is it possible, or help us to connect this to what's going on in Russia? We're hearing from some quarters that this is apparently connected to what's going on in Ukraine, Russia's invasion to Ukraine.
I think I would rather look at it as maybe an indirect process about what is happening in Ukraine. But one thing we also need to look at is this scarcity was looking at something that was being under control a couple of days ago. I think over the weekend, now there's huge traffic in Lagos. And also the traffic I came in from Benin yesterday, and it also started building in Benin. So one of the challenges I think NNPC is facing now, it has to do with logistics of moving the product. And the other aspect is racketeering. Black market is really thriving. Black market is thriving in Abuja, is thriving in Lagos, and also thriving in some part of Benin. So what you have is, once you have a little bit of scarcity and the product, you have a shortfall of product of about 20 to 30%, you have scarcity that we have at the moment. And my advice is NNPC just come out clean and let Nigerians know where they are and what is really happening. And on the other aspect, you also have to look at, we are not maximizing the benefit of having $100 per crude over what is happening in Ukraine right now, because we cannot even meet our OPEC quota, daily OPEC needs. And you also have the subsidy outflow. Subsidy outflow in the sense that the government tells you, instead of making so much money from it, the money also go into paying subsidy. So whether you have $100 per barrel, whatever we have is that we're in a cash-22 position. That is where we are at the moment.
Yeah, I wonder which way forward now. Where do you see us going forward?
I think our way forward, first of all, we have to stabilize domestic energy consumption. Unfortunately, NNPC needs to get in as much products into the economy as it can. And then in the medium term to long term is that we also need to meet our local energy needs, because we are importing everything. So just imagine that it becomes difficult for you to have any shipment coming in from Brussels with product, then we are stuck. We're in trouble here.
All right, Mr. Sele, we really have to stop it there. It's an ongoing conversation. We'll certainly get more perspective on this. Thank you so much, Mr. Peter Sele, for joining us for that conversation.
Thank you for having me.
So ongoing now is the 5th Nigeria International Energy Summit. The oil industry is under siege, and this is one opinion or perspective that has been expressed by the OPEC Secretary General at the ongoing summit in Abuja. Mr. Barkindo said this during his opening remarks. Mr. Barkindo said that there are over 700 litigation cases in courts against oil companies worldwide currently, all in attempts to press oil and gas to be more environmentally friendly in its investment. He emphasizes the need to also take into focus the developmental needs of the African continent.
our great continent, Africa, is still relatively unexplored, with approximately 125 billion barrels of proven oil reserves and 16 trillion standard cubic meters of natural gas. It would be a tragedy of unimaginable proportions if, despite billions of dollars being poured into investments for these resources, this went to waste as stranded assets. Climate activists have seized the momentum and are dictating the terms and pace of the energy transition. The parameters of the public discourse often seem reduced to the question, are you for or against fossil fuels? It is perhaps the ultimate false dichotomy. It erroneously limits what options are available. It should not be a question about one or the other. The challenges before us are enormous, and we have seen recently that the strains and conflicts related to energy affordability, energy security, and the need to reduce emissions require a delicate balancing act, comprehensive and sustainable solutions, and with all voices heard and listened to.
Well, our final conversation today still rests in Russia and Ukraine. They are major producers of a range of commodities: oil, natural gas, grains, metals, and of course the prices are very volatile at this time. We have Matt Kiniga to tell us how this is affecting Africa, which we know is very commodity dependent. Hello, Matt. Good afternoon.
Hi, good afternoon. Thanks for having me on the show today.
Good to have you, Matt. So which African countries are most exposed to the effects of this conflict?
So it's worth noting that the effects of the conflict in Ukraine will depend on many factors. So how long it lasts, how destructive it is in Ukraine, whether Russia takes retaliatory measures against the EU and NATO states. But overall, most countries in Africa will be affected. But the countries that are the most vulnerable are those with quite close trade, economic ties with Russia. And those are, well, specifically South Africa, to a lesser extent, Cote d'Ivoire, as well as Zimbabwe, partly because it has quite a close political relationship with Russia. The countries that are most reliant on European tourism and exports, such as Kenya, South Africa, but also to an extent West Africa, such as Cote d'Ivoire and Ghana, are also vulnerable. And this is more of a sort of indirect effect, because we do expect there to be a slowdown in European economic growth as a result of this conflict. And as a direct result, we do expect consumers in Europe to be more cautious over the next year or so. So certainly we have a broad range of impacts, some direct, some indirect, and some quite short term.
Yeah, I know that you mentioned tourism there, but is that the only industry that will be most affected by this?
So certainly not. Tourism will be affected. We have seen very happily a recovery in tourism in many African markets, but this is probably going to go into reverse to an extent. Other industries that will be badly affected by this include agriculture. This is because Russia is one of the largest producers of potash, which is one of the key ingredients for fertilizer. So we're expecting to see the input costs for the agriculture industry to increase significantly across the world, including in Africa. And this is obviously a very important industry for the continent. Manufacturing also faces quite significant increases in the costs because of higher energy prices as a result of the conflict. But it's also worth noting that there are a couple of industries that will benefit in the short term from this conflict. This includes extractive industries. So we have seen a very sharp increase in oil prices over the last few days. So this will benefit the oil industry in Nigeria, for example, Angola and Ghana, and also countries that produce metals that Russia also produces. So I'm thinking about palladium and platinum produced both in South Africa, but also to an extent gold, because it's seen as a safe haven asset. So although there are significant negative economic ramifications, there are a couple of industries that may actually see a bit of an upside from this conflict in Africa.
All right, Matt, do you see this? I mean, well, they're having talks now. Hopefully something fruitful comes out of that. Do you see this effect being nipped in the bud?
So the conflict, in terms of talks, having a positive result. It's way too early to tell. I think the Ukrainian side probably wants a complete removal of Russian troops. The Russians probably want something else. So at the moment, it's far too early to tell whether this will come to an end. And we're probably going to see an escalation of, or you could say a deterioration of relations further between Russia and the West, NATO and the European Union. So it's probably going to last a little bit longer.
Wow, unfortunately so. Well, thank you so much, Matt. Thank you so much for sharing your thoughts with us, and do enjoy the rest of your day.
Thank you, you too.
So that's where we draw the curtains on the program Business Incorporated for today. Thank you so much for being a part of it. Of course, join us tomorrow for a fresh episode and update from the world of business. And then 10 a.m. we'll have Business Morning. Do stay with us. I'm Ini John Mekwa.